Corrective triangles, these are patterns that we'll see in a more sideways market at times, and there are a variety of different kinds. We have ascending, descending, contracting, and expanding. Contracting is the most common, but you will see all four types from time to time. You'll see these particular patterns in the B waves or the X waves. One thing to note about triangles is they're difficult to label at times until they're almost finished, and they're even more difficult to trade because they can expand, creating new label points. So you'll normally see I don't label a triangle unless there's not much of other choice. I'll sometimes put it as an alternate, and very rarely do I try to trade it unless it's really clear to me. And a little trick about the most common triangle anyway, which is a contracting triangle, is when you see a contracting triangle, normally once price exits that triangle, a very good target is the equal legs, or 100% of the base of the triangle. All right, and we'll show that here in a moment. And then when you're looking at the correction, a very common target is the very bottom of the triangle. So let's just go ahead and let me get a chart here. All right, here's the euro dollar Japanese yen pair, and right here you can see a triangle. All right, and this is a regular contracting triangle. So I'm just going to kind of draw this like this so we can see this. Okay, here's that triangle consolidation. I'll put some labels on this as well, and I'll just go ahead and label this as an A right here, B. And I'm using larger labels than I want to, but that's okay. At least you can see them. C, D, and then this pullback right here in E. Just move these around here so you can see them, and there's that E wave right there at the end. Okay, so let's try that again. Here we go. A, B, C, D, E, and then the exit. Now let's go ahead and measure. Let's measure the exit. So basically what I'm going to do is I'm just going to measure this right here from this high to the low, and I'm going to pull that back to the bottom of our E wave right there, where our E wave took off from. And look at that, equal legs. And that's what we were talking about. We measure the base, this initial A, the base of the triangle, project that out from the bottom of E, and that gave us a equal legs move of that base, so 100% of that base. Now look at the correction. Look at the divergence, qualified divergence here at the end. Price moving higher, MACD swinging lower. But look at the target. Look at the target on the correction. The base of the beginning of the triangle. And you can see it occurred as the X wave of a triple. Okay, the X wave of a triple. Now, why is this a triple? Because this is a double. And when you count this, and this is one of the things you just have to get used to seeing, right here, this is a three-wave cycle. All right, and you have to be able to see this. Okay, so from the high, see this pullback right here? See that pullback right in the middle? Look at where the next leg of that cycle went to. All right, so this is an overall double right here. Here's your initial move, your X wave setback, your second leg of your double. It's a three-wave cycle. Move to equal legs after this initial pullback. Now it's very sharp, so that's a very bullish sign. It's a bullish sign for a continuation. It's also an extended move. It's also an extended move. And you'll see that by drawing from this low to the high, pull that back. All right, and now we're going to add on our extension, our 1618, and you can see this extended right to that 162% of this cycle. Okay? Folks, the market is very mathematical, and you're going to see this the more you go through. The more you go through and look at these and look for these types of setups, you're going to see it. This is an extension setup that we're going to teach you. Moved into a triangle, and then the final leg of the triple before correcting the entire cycle. Let's pull our fibs on the entire cycle. 50 to 62%. Okay, that's the other major level we're going to watch, the major zone, the 50 to 62% zone on a correction. That's right where the market corrected to. After this triple, we corrected 50 to 62%. Okay, so you have a W, X, Y, X, triangle X, your Z wave to finish the triple, a larger cycle label. Now you have a correction or a potential reversal. Okay, we'll have to determine that as we move forward. Then we move into another cycle. Okay, so hopefully this is all starting to come together. And trust me when I tell you, the more you go through charts and see this, the more it's amazing. It really is amazing how patterned the markets actually are. Okay, folks, so anyway, that's triangles. I know I tend to go into the other patterns here as well, but we want to talk about the triangles. And triangles aren't very common. They're really not that common in the market. But when we do see them, the most common triangle that we do see is a contracting triangle, or otherwise known as a symmetrical triangle. And the main rules you have to remember is that our C wave can't go past this A wave. Our E wave can't go past this C wave, can't break that point, and our D wave can't break this B wave point. Again, the B wave can't break the point where this began, can't break this high in order for this to be a qualified triangle. Each cycle has to contract for a contracting triangle. Again, the same thing would be for an expanding triangle. Each cycle would have to break that cycle and expand. Again, not quite as common, but we do see that at times. Okay, folks, so those are triangles. Next, we'll talk about what are called wedges. Many folks are familiar with the wedge, or in other terms, ending diagonals. Okay, they're reversal patterns. We'll talk about those next.